We come into Friday with risk appetite back on the rise after U.S. equities managed to recover out from the depths of Thursday's weekly low. And yet, beyond the calls for more stimulus in the U.S., it's hard to find a whole lot out there to be feeling good about, which has us questioning the rebound in risk sentiment, leaving us more inclined to classify the move as more of a correction ahead of the next downturn. Economic data out of China earlier today was mixed and hasn't done anything to inspire confidence either. We have seen the FX market react as well, with the US dollar selling off as flight to safety flow is reversed. However, when it comes to the US dollar, we're not entirely convinced the buck will be able to hold with its flight to safety correlation much longer in light of the latest ramp up in trade tension between the US and China and the US administration's ongoing commitment to promote a soft dollar policy. Overall, the outlook for the global economy is quite gloomy, and while the prospect for recovery post-pandemic is certainly there, it isn't going to be a recovery that looks anything like the shape of a V. And while on a shorter-term basis injections of stimulus can be helpful, there is no denying the enormous price tag all of the stimulus carries looking out, something we believe should be a lot more worrying for investors. This week, the Fed chair displeased investors and President Trump as well as he pushed back against demands for negative interest rates. We think this is the more responsible move, though we're not sure how much longer the Fed chair will hold out if the market increases that pressure on the Fed. Over the past decade plus, there has been a clear pattern of the Fed bending to the will of the market, something that has created a major credibility crisis for the central bank. Still, the notion of unlimited support is nothing short of fairy tale-esque, and we think it's important investors wake up to the fact that the consequences attached to moving further in the direction of additional accommodation and stimulus will be severe. And yet, for the time being, the market continues to buy into the strategy that promotes reckless investment in return for additional stimulus. Until something gives, we still might see a situation where risk assets continue to push higher despite the massive red flags along the way. Looking ahead, key standouts on the calendar include German producer prices, German GDP, Eurozone GDP, trade and employment data, and a U.S. docket that includes retail sales, industrial production, business inventories, JOLTS job openings, and Michigan sentiment. That's all for now.